Good morning. Today is Tuesday, September the 4th. The time right now in Singapore is 11:20 in the morning. Overnight, we already knew that the US market was closed for the Labor Day holiday, so there was hardly any activity. And today, we're going to start off the analysis starting with US equity market, in particularly the micro E-mini futures contracts. And right now, what you can see in front of the screen here is the 4 hours micro E-mini Dow Jones futures. We can see that the Dow has actually recovered very nicely from 34,062 to 35,167, and this may actually seem to be hitting a pocket of prices which I have previously listed out to be an area of interest for selling, and this is 35,049 to 35,317. So the high here at 35,167 end up with a doji. You can see this price here. There's a candle bar that looks like a long-legged shadow doji. Now this is a classical reversal signal as far as we can see, and in the near term, at least the market is going to trade to the downside. I do expect prices to at least test the 34,500 levels, and let's see whether the market can hold here. In the event the market cannot hold here, I do have a larger target, meaning to say that the larger degree three wave from 35,844 may actually unfold towards the 33,600, if not the 33,200 levels. So there's going to be quite a bit of a dip going forward as far as I'm concerned in September. Now in September, there are two major events here. One is the FOMC, which is slated to start on September 19th to 20th. This time, the market do not expect the Fed to hike interest rate. In fact, they expect them to hold interest rate steady at the current level of 5.5%. And the other major event is the possible shutdown in US government by the end of the month. And during the earlier June debt ceiling negotiation, they actually built in a clause that they must cut spending by a certain amount, and that budget is going to end at the end of this month. So Congress must actually approve a stop gauge measure to increase the margin to tie them over the first part of the fiscal year 2024. And if there is no agreement to do so, there is a risk that the US government may shut down come October the 1st. So these two are the two major events, and this will be acting as a wet blanket on equity markets going forward. In the S&P 500, we do see the S&P 500 is also tracing out a very neat corrective three-way bounce from 4,350 all the way to 4,547 and three quarter. And this is seen to be a pocket of prices, which I also previously list out as an area in which selling interest may re-emerge. That area is 4,532 and three quarter to 4,560 and three quarter. And we can see the price are having an effect here. And if this is the case, market may drift lower towards the 4,435 to 4,456 levels. And if this level cannot hold, I do have a target which see a larger degree pullback from 4,634.5 all the way to test the 4,003 levels, maybe even lower to 4,260 levels. In the Nasdaq 100 futures, we can see that Nasdaq has also traced out a very symmetrical three-wave rally from 14,609 and a quarter all the way to 15,661 and a quarter. And this is an area in which the market has previously breached a previous swing high here, but could not close above it, giving it a case of a fake move like what we saw in the Dow Jones, which closed in a long-legged shadow doji. And like I said, this is a classical reversal signal. That means going forward, we may see lower prices in the Nasdaq, possibly targeting the 15,200 to as low as 15,100 levels. And if this level cannot hold as well, we may see a larger degree three-wave pullback towards the 14,600 to as low as 14,100. So do watch out for a move to the downside for the month of September. Over in Asia, we can see that Hong Kong equity markets actually rallied last night to just under 19,000, stop short at 18,896 in the futures contract here. And so far, we do have a three-wave rally here, and the market gone up on the back of stimulus roll out by the central government in China. And also, we have also seen efforts to increase liquidity in the marketplace by allowing banks to lower their reserve requirement. So all these are seen to be very tiny steps towards stimulating their local economy, and that has been the reason why the market has been a little bit more buoyant of late. And of course, the big move here was on news that Country Homes, which is one of the largest private Chinese equity property players, has actually made good on their bond in ringgit, although that amount is negligible compared to the dollar-denominated bonds that they have not paid out, and they have only the next few hours, or rather the next couple of days, to do so before they go into a technical default. So this will be the wet blanket hanging over the Chinese market if Country Home cannot meet the commitment here. So by and large, if we see an extended rally, likely to see resistance around the 19,400 to 19,500 levels before the market unravels to the downside one more time. Okay, over in the Nikkei, we can see that Nikkei prices has also traced out a three wave. However, this three wave doesn't look symmetrical in the sense that this latest rally from 31,540 to 33,090 that we saw yesterday is a bit longer than the one at the beginning from 31,230 to 32,290. So there is possibility this rally that we see may extend a little bit higher towards the 33,260, perhaps to challenge the swing higher at 33,470. So I do expect this level to offer some kind of resistance, and I will be very keen to see what's happened next. Over in the dollar, you can see dollar remains very well bid. You can see dollar index is now back to challenging last month high and 104.38. We have a high on Friday at 105, 104.25 or 26 thereabout. And this is on the back of possible challenge above the June high at 104.61. And likely to be the case, this high will be taken out. There is the possibility the market may actually go all the way back to test this level of 105.5 to 105.90 levels. So in the meantime, there is a little bit of a bullish tilt in the dollar. So do not try to sell the dollar just yet. In the euro dollar, we can see because the dollar has been strong, so the principal currency has been decaying, and we have seen euro dollar continue to slip. And if we do see any kind of bounce later on in London session, I suspect it's going to be controlled within a 108.15 to 108.30 levels before it goes below the August low, heading towards 107. In the sterling, we see something very similar. We see a bounce yesterday to the high here is 126.43, which is well within this bracket of prices, which I list here as 126.30 to 126.45 to offer immediate resistance. And very likely the market will take out the August low below 125.5 towards all the way to 123 even. So we can see that there is potential for the market to dip even further. Aussie has been very weak. We have seen a three-wave rebound. You can see the low here is 0.6364. We see a very neat symmetrical three-wave rebound all the way to 0.6522 before the market unravels. And before it comes down this morning, yesterday there was an attempt to rally, but it was kept below 0.6480. And now we are seeing possibly the continuation of this drop way below. It's going to be a move below 0.6364, and this could set a stage for a move towards 0.62. Okay, dollar yen right now is very, very firm. You can see that last week we have a low of 144.44, and this is a three-wave pullback, very symmetrical. Again, it found support here, and before it bounced, it actually take out a fake move here. You can see the swing low here is 144.58. Market actually take out this low here without closing below, and then it swing back out, and then very strongly too. And this is setting the stage for higher prices. Immediate target is at 147.90, perhaps even higher. I can see that there's a possibility of market if the Bank of Japan do not come in to intervene, there is a scope for market in dollar yen to go up to as high as 155. But again, that is on condition that the Bank of Japan or the Ministry of Finance do not come in to intervene. Because last time last year rather, in September last year, we see dollar yen at 146, and Ministry of Finance came in to intervene by selling dollar, buying yen, and take the dollar yen rate from 146 to 140 all within 24 hours. So there was a 600 pips fall. So do watch out for any kind of sign that the intervention is in play. Okay, so be very careful if you continue to buy. In dollar Canadian, it's a lot easier to buy because there is no fear of intervention. Market right now is at is already above last week's high, last Friday's high, currently at 136.18, which is marginally above Friday's high. So this market may actually take out the 136.40 and even beyond the April high of 136.70 towards perhaps even to challenge the 139 levels. And over in energy markets, we can see energy has been very, very strong this morning. We have a marginal high at $86.14 in the WTI light crude oil futures contract. You can see that this is the year's high. In fact, this is the highest since November of 2021. So is it 2022? Sorry. So we can see that this is definitely a trajectory that suggests that we are going to see higher prices going forward. And the supply situation is that there are talks that Saudi Arabia may extend its production cut all the way, instead of ending in September, it's going to end in October. So that could be underpinning the market here. Likewise, Russia is also playing along with the Saudis in trying to extend the production cut for another month. So this is underpinning the market, and this is the technical outlook. We may see prices continue to go even higher to target the $92 per barrel levels. Over in precious metal, we can see as the dollar stabilized, the phenomena here is that gold has also been going up, which is a little bit less normal. Okay, I would say that traditionally when you have strong dollar, precious metal tends to suffer in terms of prices, but right now we see both are moving in the same direction. So do watch out for further gains in the precious metal space here. Market have a high of 1,942 and 95 cents last week, and it looks like it probably will do a three-way pullback. At the bare minimum, market may test the 1,928 levels. So let's see if the market can hold here, and if it can hold, it will probably project higher to test the next level at 1,966 and 40 cents. In the silver market, we see a bit of a pullback here, and this pullback seems to be a little bit deeper right now. So that leaves the scope for a three-way bounce. I would like to see something like this bounce and come back down to test the $23.60, perhaps to as low as $23.30 levels before the market stabilize. So do watch out for buying opportunity in silver. Now in Bitcoin, we continue to see losses going forward from the sudden reversal in fortune in the Bitcoin from 28,180 all the way to 25,450 was caused by the idea that the SEC, even after they lost the case against Grayscale to launch a spot BTC ETF, has decided to delay their approval for the others waiting in line for a ETF license. There are in total 7 companies waiting to get who has applied for a spot BTC ETF license, and the delay is causing, I think, it basically buying time for the SEC so that they can see what they want to do. So this is causing price to unravel, and not sure whether the market will go down and test the June low, which is a 24,840 levels. Let's see if the market goes to test this level and cannot close below and have an aggressive rally, then that could be another fake move in the making. So this is my 2 cents worth, and come back to you tomorrow with another update. In the meantime, you take care. Bye-bye.